Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good morning, good afternoon, good evening. Welcome to Develop Your Edge with Anthony Crudele. I'll be the co-host, Tom Schneider, CMT with NinjaTrader. And Anthony has cooked up another great idea today to talk about. I can't wait to talk about it. Before we talk about talking about it, let's introduce Anthony. How are you, Anthony?
I'm doing great, Tom. Been under the weather all week. Today, I'm actually on the mend, so I'm feeling good and glad to be here.
You never know it by looking at you, hearing you talk and all that. But hope you had a great Thanksgiving. We missed you for the last couple of weeks, but we're excited to get going today.
Always a lot to be thankful for. I love the holiday season. And today we're going to talk about the beginner's way into interest rate trading. I think that interest rates are really tough for new traders to get involved with, because I always have thought that the bond traders were always so much smarter than the equity guys, right? Just like the options guys are so much smarter than the futures guys. And when you look at it from that perspective as a new trader coming into trading futures, and that really in its own right is not the easiest thing to do, is to come in and just start trading futures. But when you get into interest rate futures, it can be very intimidating. And so what I want to do today is really just peel it back and show all of the different type of interest rate markets out there that CME offers, which there's a lot. It's actually where the majority of the volume is done on the exchange. If you guys go back, you remember the Eurodollar futures, that was the biggest contract at CME Group. And now SOFR is pretty much the biggest. And so you have just these really huge, massive markets with tons of liquidity that I think for a lot of traders might almost be a better path for them than only just trading equity indexes, right? I mean, we always have this bucket. We're probably a vast majority, high 80+% of the traders are trading S&P and then NASDAQ, some Russell, some Dow. And then you get into some gold and some crude oil, some currencies. And then way at the bottom is probably interest rates. But when you look at it from an exchange perspective, it's interesting that all this volume happens on the interest rates, is where majority of the volume happens on the exchange floor, and that's where all the bigger traders are, the institutions and stuff like that. And so I think that I think it's important for new traders to have a look inside interest rates from the beginner level and see if maybe it makes sense for them.
Yeah, and you're so right about the volume, Anthony. It's funny, we focus a lot on the stock index futures, and you look at the market analyzer and NinjaTrader, and you see the volume. We look, is it high volume for this time of the day, low volume of this time of the day, and then we jump to the interest rate futures, and it dwarfs, right, stock index futures. It's like, it's a reminder that there is a lot more activity in interest rate futures than and the Treasuries specifically than stock index futures, and that makes sense, right? Because the financial engine, it's kind of bigger than every other asset class. It affects everything else, so that's where the activity is.
Yeah, 100% right. And, everybody's always looking at interest rates right now. Is the Fed going to stay higher for longer? Are we going to start cutting rates? You hear really every macro conversation bring in interest rates to the table of conversation, because that's what we're all looking at, right? I mean, we've been in a Fed market for how many years now, right? When we were cutting rates, and then now we're raising rates, and interest rates are extremely important. But how do you access them? How do you trade them? Because I'm sure many of you have thoughts on where interest rates may go. So what I want to do is I want to share the screen, and I'm simply going to go to CME Group's website here and just go to the interest rate products, and you will see all of the different products on here. I mean, there is so many. You see from the top here, you have U.S. Treasuries, which we're going to focus on today. You've got SOFR, You've got the Fed funds, of course, which everybody talks about, where we're going to see what the interest rates are going to be. You got the CME Fed Watch tool. You got T-bills. Remember those T-bills, Tom?
Right.
I remember when I had to buy a T-bill. And actually, people have been buying them these days as well. They've come back into favor. You've got all of these different interest rates markets, right? Swap futures, all of these different things. And so once again, it can be very intimidating for a new trader to be like, Anthony, listen, I have no idea how to even go about trading interest rates. This is just way too much for me. So how do we peel this back and make this on a very beginner level? Because I will tell you this, you got to remember something too, everybody. Look at interest rates, as complicated as they may sound. Some products that are built, that the CME has built, are really, really simple and basic as well. So you don't have to be intimidated by the actual structure of the market. And what we're going to focus on today is the 10-year. Now, what's interesting about the 10-year is that there's actually 3 markets you can access to trade it. There's the 10-year futures, which is the ZN, which most people know has really been the longstanding 10-year contract at CME Group. Then they created the Ultra 10-year, which is actually one of my favorite products for a couple of years. I traded that more than almost as much as S&P. And that's the 10-year Ultra. And then there's the Micro 10-year. And they're all pinned against the 10-year, right? But they all have a little bit of differences with them. They are going to have different ticks movements, and they're going to have different tick values, contract values. And the ZN is going to be the most popular one. That's the one that's been around the longest. And when you look at the ZN, this is really, it's a 10-year futures, but it is not necessarily going to be exactly pinned to what the 10-year yield is. That's really more of where the ultras are. The ultras came in as a product that is going to be pinned a lot closer in expiration to an actual 10-year yield. So I know that might sound a little bit confusing, but that is what it is. And that's why there's a 10-year and there's a 10-year ultra, because as the futures markets, we expire quarterly, and so that price is going to have a little bit of difference on how it directly impacts the rates. And so when you look at the charting, and then this is why I want to make this super simple for beginners, don't necessarily worry too much about the ZN difference versus the TN here on NinjaTrader, which would be the ultras and the 10-year. What we're going to look at from a very basic and beginner level is just trends, same type of things that we're looking at, because ultimately as traders, you're going to have that macro bias behind you of where you think rates can go. And so when you have that bias from a macro understanding, then you're going to go to the futures markets and see how do I execute that opinion, right? That thought, that bias. And when you look at the 10-year and the 10-year ultra, when the market is going down, okay, when the market is going down, that means that rates are going up. So you can go back and look over the past year, rates have been going up, treasuries have been going down. Okay, so you want to be short treasuries in that instance if you think rates are going to go up. When treasuries start to go up, that means that interest rates start to go back down. Okay. And so you have this opposite correlation. So that originally on the onset is a difficult thing to think about, because as an index trader, you think, even for good news, bad news, if I buy the market, potentially good news means we go up. Not always, really, not a lot of the times, but that's just the way that we think, right? And so we think an impact on a market, if something good or bad happens, how equity indexes will react. And so it's a simple thinking, buy or sell, long or short, based upon those, headlines or data points. Treasuries is going to be different, right? If rates are going to go up, the market's going to go down. If rates are going to go down, market's going to go up. And so what I look at is the first thing I would do getting involved in interest rates is let's take a look and see what the 10-year is doing. Now, the 10-year, what I do think is also a little bit different than we're going to look at what your traditional equity index is when you're trading 10-year or 10-year ultra, I tend to look at a little bit of a longer term moving average. I'm using the 20-period simple moving average here versus on the equity indexes. A lot of times you guys hear me say the 5-day. Now, why is that? Well, because these markets tend to trend for longer, okay? And they're a little bit more of a smooth trending market. Some of you might even be very favorable to that type of a market. And they're not going to be as volatile. They are very volatile these days, obviously, because of everything going on with the Fed. But ultimately, they're not going to move as much as your NASDAQ or your S&P, okay? But they're going to have a higher tick value, okay? And so I wouldn't recommend coming in trading 10-year and 10-year ultras right away. We'll get to where I think you should go. But when you look at the charts, same kind of philosophies you're going to have, but I would take back these super short-term indicators, because it is a more of a rounding type market. You're not going to see the 10-year can be overbought or oversold for weeks or months versus like an S&P where it might, be overbought or oversold, and you get a good mean reversion trade where that trade, pays you well. You're not going to see that as much as interest rates. They're also, because they're much more macro based, right? And so there's that different thinking. So that's the first two things you look at, and you can compare the ZN versus the TN. All right. And you could see how they look. And I like to look at both of them. And I think it's important for you as a beginner trader. That's what this is all about, to look at them and see where they are relative on a daily. But where I would be focusing my attention to trade is actually the yield. And this is where I think CME really went right with adding interest rates to expand the horizon of traders getting into these products. And that is when they created the micro 10-year yield. They created this for the 2-year, the 5-year, the 10-year, and the 30-year. This is what you see over here on the dome on Tradeovate. And this is where you could actually trade the yield of the 10-year, 2-year, 5-year, or 30-year. And this is where it is the very simple. If rates are going to go up, I can buy. If rates are going to go down, I can short. It's as easy to get short as it is long, and you trade the yield. So as you can see here, you have the 10-year yield right now in the futures market, and you'll see a lot of people charting to this now, which I think is awesome. Because this is the actual market on the rate of the 10-year futures, right? And so when you look at this, you can see where the 10-year yield is yielding. And so if you think that the 10-year yield is going to go up, you don't have to go in and short ZN or TN. You could actually just come in and get long the micro treasury yield futures. And what's great about these, it's only $1 per tick, right? And that's really affordable if you're trading futures markets, and they don't move a ton. And so you could actually come in and trade these for really a relatively low account size. And you could actually, I think, position these, overnight. And because it's not costing you a ton of capital, it's very capital efficient to trade the yield versus trading the bond market, or the bond or treasury futures, or even an ETF, right? We don't talk ETFs on this show, though. Right. But ultimately, that to me is a great path for a new trader to come in. Now, maybe I'll bring Tom in just so we talk about the scope of all these products, and then I'm going to go into a little bit of strategy with these markets.
So, Anthony, that's great. I love what you said about the bond market being smarter. You look at the bond market, those guys are smart traders. And the relationship to rates, you just finished with the interest rate future, but is it something where you could maybe hear what they're saying about what the Fed is saying about the next meeting? They're going to keep the rates the same, or maybe there's a possibility of one more rate hike, and then look over to the bond market and say, what are the bond traders thinking, right? Because if there's one more rate hike, then those bonds will go down, but we haven't seen that. We've seen a little bit of a rally for the last month and a half, and maybe the bond market is telling us, yeah, maybe there isn't another rate hike, even though we hear Fed speakers saying, yeah, there's a possibility of one more. Is that something you could do even when you're not trading interest rate futures? Could you use that information to your advantage?
That's an excellent point. I don't think that there's a trader out there that should not have up on their chart this micro treasury yield futures. I mean, you can put up the ZN and you can put up the TN, however you want to look at it. But if you don't know what rates are doing, then you're really missing the biggest part of this picture right now. I always look at the markets as a whole. I remember when my mentor, Louis, who's passed away, he was really my trading mentor. I actually just did a whole podcast on mentors, but he was the guy who really helped me see beyond what was just right in front of me. And what he taught me was, Anthony, I remember a situation, maybe I do a quick story. I remember a day where I came in and he and I had talked in the morning, and he had said to me, Anthony, we're going to be looking at potentially getting long. Here's some levels that I'm looking at. Let's see what the market does. It gets down there. Let's wait and see what happens, right? We go into the day. We've got our plan. We've got our levels. Come into the day. We get to that level. I buy the level. Market goes against me. I get out. Market ended up coming back, rallying. I'm already stepped out for the day. The day is over. I went back and talked to him, and I said, He's like, so how'd you do? You had to do great, right? And I'm thinking to myself, no, man, I didn't do great. I didn't, I did poorly. I got stopped out and the move eventually happened afterwards. We can all relate to that. And he's yelling at me. He's going, did you not see what was happening in the 10-year or the NASDAQ? And he's talking about things. And he told me to look beyond what's happening right in front of me. When we get to a level of interest, when we have something happening in a market, we always have to look to see what is potentially leading that market, if there is something leading it, and how that impacts our market directly. And interest rates are a key component of this these days. If you were to go and to buy the S&P on a break, and all of a sudden it was a day where we had a bond auction, or we had data that came out, or we had something that happened with the Fed, and it's during Powell's announcement, and you go and you look and see that you want to buy the S&P, but you see rates screaming higher. You see 10-year blowing through new highs. You see ZN and TN making new lows. In that moment, you may want to hesitate just for a second to see how the markets, and I don't hesitate's the wrong word. You want to pause to see how the market reacts at your support, because interest rates might be leading the S&P lower. And that is a factor. And that is something you have to watch. I've always said in Develop Your Edge, it's not just about coming in and seeing strategies and, having Anthony, giving us these different tools and ways to go on and potentially, make money. It's about developing your edge as a trader. Right? You have to really want this. You have to really put the work in. And in these moments, when you get into the moment of actual execution, you're working on your edge. So in that moment, you make a better decision. And interest rates are key for index traders, because if you don't know what's happening there, it puts you really behind all the smarter traders out there, because they might wait and say, look, this isn't happening right now. This is what's happening here. I might step in a little bit later, or I might be smaller. That's what really differentiates you from the pack.
Oh, great. And thanks for relating that story about your mentor. Sorry to hear he's passed. But let's go on. I think you have a great chart up here, and it sounds like next steps for interest rate traders is in order. So
yeah, so let's go to the charts. And I've talked about these simple strategies that I use, and I still use them for interest rates as well. And you could see, as much as they do have a lot more volume than what you're going to see traditionally in the NASDAQ, Russell, or an S&P, they still move pretty good. I mean, look at today. This market's moving pretty good in ZN. I use the same thing, but I want to remind you all that, remember, this is the 3-minute chart. This is that short-term chart. So we kind of develop our bias on that long-term. Whatever your bias may be, I also think you have to do a little bit of macro homework too in understanding what's happening with interest rates. Dig a little deeper than beyond the charts. But when it gets down to that nitty-gritty technicals in the short term, I use the same philosophy. I use a regular trading hours anchored VWAP to a 3-minute chart using standard deviation bands. Even though this market is definitely more on the macro, it's definitely more of the institutional level type market, it still is technical, because let's face it, even those institutional traders, they're going to be using technicals because it helps them manage risk, which is the same reason why we use them, right? It helps us look at key areas of interest and manage risk. And one thing about these markets that I want to point out is, first off, when you look at your regular trading hours, on NinjaTrader platform, what you want to do is you're going to want to go to the CBOT interest rate regular trading hours for the 10-year, because, this is what you're looking at here. You don't want to be pinned to the, I don't use the overnight. I use the regular trading hours. Once again, I like to see that initial open. That's where the volume comes in, and you don't want to be pinning this against equity regular trading hours, because they have different hours. So understand that. They open earlier and close earlier. And also the same philosophy. What's the VWAP doing? And I love to see the VWAP when you're looking at the 10-year. This is where the majority of the volume is going to be. And then I'll peel it back. Second most volume is going to be into the TN, which is that ultra. The ultras, they move a little bit more. They're a little bit less of volume, but ultimately, you want to see what they are doing. And I think that, I want to see what their inflows and outflows are in terms of order flow cumulative delta, where we are with the VWAPs, and are they trending lower? And then when it comes to the execution, I keep it real simple. I think really as a new trader, stepping in and trying to get short, the Treasuries, the ZN or the TN, it's going to be a lot more difficult. So then therefore you go and you could pull up your dome and you could pull up your 10Y, which is the 10-year. micros. And it's, to me, this is where you execute. And I think you can test a lot of strategies with this micro treasury. It doesn't move a ton, which I really like as your really beginner path into interest rate futures. It's only $1 per tick. As you could see here, since we've been watching it really isn't moving much at all. Interest rates aren't really meant to be moved that much. And so that's why another reason why the volume is a lot bigger when you're looking at the bond market, because they don't have the volatility. And so you've got bigger market makers making, just bigger orders. It's pricing matters more, right? It's not like the NASDAQ where, the NASDAQ can move 50 points. And really, when you look at it, it doesn't really change much. Well, it changes a lot in interest rates. So that's also something to keep in the back of your mind. But, ultimately the point when you look at this from a beginner's level is don't overcomplicate this. Inch your way into trading, interest rates. If you think they're going up and you could use just a basic strategy, I'm not going to get into the ins and outs of how I'm using the order flow anchor VWAP and all that for this. I've done plenty of shows on that and we'll continue to do them. But I just want to give you just a basic perspective of it. Look at what those other markets are doing, the ZN and the TN. That will lead to what's actually happening here in the micro treasury, which to me is the true, really beginner product. And I know a lot of bigger traders that are now, you can see some of these orders in here are pretty, substantial in size. And so there's a lot of liquidity there that can just want to just trade the actual interest rate itself versus the ZN or the TN.
So Anthony, I have a question, and maybe this is something that viewers might have as well. Do you follow bond auctions? Do you follow each one? I mean, there's so many every week, right? You have the weeklies, and then you have these, like we had the 7-year bond auction this week, and it was a little disappointing. But do you follow the results of those bond auctions to help you from a fundamental or news standpoint with trading the micro treasuries?
I don't. And the reason why I don't is because I am really not super active on trading treasuries and bonds. I actually trade the treasuries. I'll trade the 10-year or the ultras. I prefer them on FOMC days. I prefer them on, unemployment days. I think that those markets are markets that you can see the immediate impact off of the data. When it comes to like bond auctions, no, because I'm not trading them really during those times. I like to go to the treasury markets. For example, the night of the election, right? We all can remember back when that shocking night when, Trump beat Hillary Clinton. I was trading 10-year. I wasn't really trading much S&P. It's a much bigger product. And, to me, when I want to be sometimes short-term scalping, when you have a really big product and you feel that there's that macro push behind it, I tend to go to 10-year as the better day trade or the short-term trade versus trading the equity indexes because they might just be too choppy or too violent of the moves. And so really that's how I implement them into my strategy on a day-to-day basis. Absolutely, you have to be aware of, and that's another element you have to add, is that if you're going to be trading these markets, you have to be aware of when these bond auctions and stuff come out because they're going to be relative to what's happening in those markets. I just personally on a regular basis and not following them to see what I believe that the treasury interest rates are going to be doing. I have a much wider macro view. And if I'm trading, when I'm looking at like this 10-year ultra, there was actually, I remember when I was buying, not the ultra, it was the 10-year micros. I was buying these when I thought rates were going up, and I was just keeping a core position because I thought in the back of my mind, look, if Fed keeps raising rates, this is an inexpensive way for me to have more, I should say, capital efficient way for me to have a position on in this. So I use them that way. And then I'll use the ZN and the TN during times where I think markets are very volatile and I want to step in and trade with a little bit bigger because they're much higher tick value. And I like to trade those markets when markets get busier because I think that macro drop might really have, a serious move. Like I was actually trading 10-year long a couple of weeks ago, wish I still had them. But the point of it is like when I think that there's a bigger move possibility or there's a really volatile day, I like to go to treasuries.
That's great. That's great. And these contracts, these micro treasury yields, they've only been around for a couple of years, right?
Yeah, that's it. This is a new product. I mean, this product in its baby phase. And I think and that's really why I wanted to bring awareness to it with today's show, is to let people know, number one, and you brought this up, Tom, make sure you have this up on your charts to see it, because whether you're trading it or not really doesn't matter. I think that you still need to be able to see it. And I think that there is probably a lot of equity index traders out there that might be better off trading ZN or TN or the micro treasuries. I mean, based upon just your actual personality for trading. We all flock to equity indexes. I get it. I understand why. A lot of people come into futures from stocks, from individual stocks, right? And they come from ETFs and they come into futures, right? But ultimately, the index futures may not be for all of you. This might be a better product, or this might be an alternative product for you in certain instances as you start to build your playbook. I don't believe, you guys have heard me talk about this a lot. I mean, I am really not very active right now in the S&P because I don't think that the trade is really that clean. I actually look at the 10-year as of late. I think it's actually even a little bit cleaner. I thought crude oil was a little bit cleaner. And so I don't know that the equity indexes always are what I would call in play. Right. And there's going to be a lot of days to where, or maybe weeks or even sometimes months, where I don't feel like the equity indexes are the best trade. And I think that maybe this might be. And I'm not saying you should go and be hopping products, especially if you're a new trader. I think you should stick to one for a period of time, but open your horizons and understand that there are other products out there, and dipping your toe in the water and in like a micro treasury for a market that's only $1 a tick. It's a big undertaking, and who knows, maybe you start to like the way that the bond markets move.
Yeah, you just mentioned people coming in from the stock index or stock market, trading stocks, coming over to futures kind of opens the world to them. And it reminds me of Frank Teixeira, CMT. He used to run Wellington's technical analysis group, and he was a portfolio manager, really smart guy, CFA, CMT. And he would say, can I see it on a chart? I'll trade it, right? He wasn't really concerned so much with the fact that, oh, it's this asset class, I know nothing about it, I'm not going to trade it. It's kind of the reverse. And, to your point, interest rate futures, treasuries, these are all kind of really important, especially in this day and age of what is the Fed going to do next? So, don't be scared. Don't be shy. Jump in.
Yeah. And, it's interesting. Some people will say, the pure technical analysts out there, right? The pure technical people, they'll say, you can look at any chart and, it's just a chart, right? But I will say this, as someone who's been trading futures for quite a long time, these markets do have different characteristics. And I do use some different indicators on different markets. And so when I look at the treasury market, it does have a bigger macro drop, right? It does have I think different indicators that are going to be better, more efficient for you to use, because it doesn't move as quickly as, like, say, the NASDAQ or the S&P. And so I think that you do have to think a little bit differently when you move into these markets, just as I would say the same for commodities. It's a little bit different when you're talking about futures markets, because they are, commodities or interest rates or equity indexes. They are different. When you're just looking at a stock on a chart, I can see that more as a purist. But when it comes to these futures markets, they do have different tendencies, and you do have to do your homework before you start trading them.
Yeah, totally agree with that, Anthony. We're almost up against time. Do you have any other business you want to talk about?
Yeah, I want to talk about this crypto classic that CME Group is putting out starting on December 10th. What I love about what the CME Group is doing with these trading challenges is they're giving people an opportunity to come in, trade these markets, and have CME live quotes, see how these markets move. I am someone who's traded some Bitcoin and some Ethereum futures over the past couple of years. I like the products, not a ton trading them much as of late, but I think that this is a great way to go in and see how these markets move. And they've also added options markets to this crypto classic, which I thought was really pretty interesting, because it's not often you can go out there and sim in a competition to trade options markets on crypto. And so I thought this was really cool that they were doing that. And so it's the Crypto Classic. You can go there and check it out. First place is $2,500. Second place is $1,500. Third place is $850. It's with Bitcoin and Ether futures and options. And I think, if this market's of any interest to you at all, this is a great time to go and see it, check it out. It's a week-long challenge. I think it's pretty cool that the exchange is doing that. And I'm actually going to participate in it because I want to see how these options move in Bitcoin and Ether. And, we'll see. I've been trading some more options in the equity indexes. We'll see how they move in crypto.
I love it. I'm signed up for it as well. Didn't know about the options, really haven't paid attention to it, but really interesting now that you mentioned options are a part of it. And you're right about the sim. That must be very difficult to simulate, more so than just the futures market. But yeah, I encourage everybody watching to join this. I've done the last few challenges, and they've been a lot of fun to participate in.
Yeah, I mean, let's face it, they come down to the last day too. I always tell everybody you could be in the middle of the pack, and really towards the last day or two, you even see the people up top, they start to fumble. Next thing you know, the winners just, step up and have a great day or an hour or so, especially with these options markets. I mean, who knows? I mean, I think if there's nothing else, I would go just to learn, just to see how these options move. I think it's going to be very interesting and fun.
Well, that's great. And Anthony, we're up against time, like I said. So I want to thank you again, as always. Good to see you. And we'll have another show next week. So thanks for coming on.
Last show of the year, everybody. Make sure you tune in. It's going to be a fun one.
Maybe Anthony will have a Santa hat on or something. We don't know. We'll figure it out. A green jacket. Anyway, want to say to the viewers, thanks for coming. We do have Mike Burke closing the day at bars closing 3:15 this afternoon. In the meantime, have a great trading day.